Welcome to Seven Bulls. We break down finance so that anyone can understand. Roll the intro.
Hello, fellow investors. Welcome to Seven Bulls, a WeGrow affiliate. Today we're getting into two consumer staples agribusiness giants, Archer Daniels Midland and Bunge Global. Now, these companies are deeply intertwined with the global food supply chain, which means their performance is influenced by factors beyond just earnings reports and management decisions. We're talking about things like weather patterns, crop yields, and the global demand for commodities like grains and oilseeds. These factors create cyclical patterns in food prices and agricultural production that can significantly impact the bottom line of companies like ADM and Bunge Global. Think of it like this. When the weather cooperates, harvests are bountiful, and global demand is strong, these companies can rake in the profits. But when droughts, floods, or economic downturns hit, it can disrupt these cycles and put a dent in their earnings. It's a reminder that investing in agribusiness requires a long-term perspective and an understanding of these broader trends. Before we move on, if you get any value in the video, make sure to give it a like and share. Also, feel free to leave a comment. It really helps us with the algorithm. Thank you. Now let's get back to it. Now, let's zoom in on ADM and Bunge Global. First up, let's talk about size. ADM is the bigger player here, boasting a market cap of $25 billion compared to Bunge Global's $11 billion. That translates to an enterprise value of $36 billion for ADM and $15 billion for Bunge Global. Remember, enterprise value includes debt, giving us a more complete picture of their overall value. Let's pop the hood and look at some key metrics. ADM's trailing PE ratio is 15, while Bunge Global's is lower at 10.5. This means investors are paying $15 for every dollar of ADM's earnings and $10 for every $1 of Bunge Global's. Generally, a lower PE suggests a potentially undervalued company, but we need to look at the bigger picture. The forward PE ratio gives us insight into expected future earnings. ADM has a forward PE of 11.5, while Bunge Global's is 9.71. These lower forward PEs could indicate that analysts expect earnings growth for both companies. Next, let's examine their financial health. ADM has a debt-to-equity ratio of 0.51, meaning it uses less debt financing than Bunge Global's 0.63. A lower debt-to-equity ratio is generally better, as it suggests lower financial risk. Efficiency-wise, ADM has a return on equity of 7.36%, while Bunge Global is higher at 10.92%. This means Bunge Global is currently more efficient at generating profits from shareholders' investments. Both ADM and Bunge Global have seen their stock prices decline over the past 52 weeks, with ADM down 29.3% and Bunge Global down 20.3%. But remember, past performance doesn't guarantee future results, especially in a sector influenced by cyclical trends. So, what are the pros and cons? ADM has a larger market cap and enterprise value, suggesting stability and market dominance. It also has a lower debt-to-equity ratio, indicating lower financial risk. However, it has a higher PE ratio compared to Bunge Global, potentially suggesting overvaluation. It also has a lower ROE, indicating lower efficiency in generating profits, and we can't ignore the significant stock price decline. Bunge Global has a lower PE ratio, potentially suggesting undervaluation. It also has a higher ROE, indicating higher efficiency, and its stock price decline has been less severe. However, it has a smaller market cap and enterprise value, and a higher debt-to-equity ratio, indicating higher financial risk. Ultimately, the best investment choice depends on your risk tolerance and goals. ADM offers size and stability, while Bunge Global boasts higher efficiency and potentially more attractive valuation. And there you have it. If you found this helpful, hit that like button, subscribe for more, and let us know in the comments which company you think is a better buy. Remember to keep up with your financial education. You're the only one in charge of your future. Be safe.
We grew.